So here we are getting ready for back to school, getting ready for fall, and you come in and the market is dropping, and it's continued dropping from last week. So what does this mean for what's ahead, and why is the market falling the way it is? Let's dig into all of that now. So before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in my video. All right, so we're gonna head right to the daily chart of the E-mini S&P 500 futures. So if you're new here, I'm Hima Reddy, and the E-mini S&P is my baby, all right? This is a market I've been studying, analyzing, trading for 22 plus years now. So this is a futures contract that allows you to trade the movements of the S&P 500 broad market for a lot less, right? With a smaller count and more. Also, futures are open 24/7. So if you're in other countries and other parts of the world where you want to be able to trade this most liquid futures market on the planet, you can. All right, so I analyze the ES futures market every day that I trade, and I share this analysis with my Skinny the Markets members. So this morning, okay, for the Skinny the Markets, I came in and wrote the report, but I had done my weekend homework. Now, I don't care if you're a day trader or a swing trader, you should always be doing your pre-market open analysis. And let me show you what was kind of cluing me into some things that might be going on, leading to further weakness today. All right, to start with, let's hop back to the weekly chart. And on the weekly chart, there was actually a situation here going on between price and momentum, okay, on the weekly chart. So my RSI power zone is down below, and the price here, the Gann candlesticks you can see. And I saw that there is a disconnect between price and momentum that's suggesting even more downside than we saw later last week. So then I moved over to the daily chart, and I harkened back to my own video that I shared on August 1st, talking about August 3rd being a key timing point. So you can go back and check that video out here on my channel. Now, I mentioned on August 1st, okay, that we would likely be rallying into that August 3rd date. And if the market kept going higher from August 3rd, that would be good. This rally that we've been having since mid-July would have legs. And that's exactly what unfolded. We went right through the August 3rd level, continued higher, and retraced. That means kind of got back over 50% of the losses back from this January 4th high, okay? So where we are now, there's a couple things to point out. Number one, we traded through the 50% retracement, and 50% is an important number because of Gann's numbers. W.D. Gann was important, very successful and very well-known trader in the early 1900s, and his work is where I started learning. So you might look at these numbers and say, why aren't you using Fibonacci? Well, I get into all of that in my book, The Trading Methods of W.D. Gann. But really the important thing is that we look at a past previous major move, and we look at its most important projected levels and actual levels, okay? A retracement is a projected level. It's a calculation, an expected area of resistance. But now look at how close that is to this May 4th high, all right? So the May 4th high, we came and tested. The market kind of just poked above it and then pulled away. Now, when this started here, happening between the 50% retracement and the 62.5% retracement, I was like, that's not looking so good. And I also noticed that we were starting to have more short-term weakness on the intraday charts. And again, I cover those intraday 60-minute charts in my Skinny. So why has the market been coming down? Well, there's lots of reasons that go into the day-to-day movements. But one big topic is that Chair Powell, okay, Jay Powell, the chair of the Fed, is going to be speaking at Jackson Hole, this meeting happening here on Friday, August 26th. And at this meeting, what he says about the expectations for whether the Fed hikes interest rates or not is going to be very much taken as an important set of words by market participants. So there's some worry that because certain economic conditions are not alleviating or changing in a certain way, that the Fed might hike rates. And that is something that most stock market participants here don't like. So hence the weakness, all right? So that's an overarching view. But I don't want you to worry too much about that. I want you to be aware of the calendar of big events happening. And if you join my tribe and you check out this video from within your free tribe portal in the skinny dip section, you'll see I'll share a link here of one of my go-to economic calendars so that I always know what is happening out there. And it's free, okay? So I'll share that resource in the tribe portal. So we've got the overarching fear of interest rate hikes. We've got the current weakness after hitting some key resistance levels. So what's next, all right? So a couple things. You can see here that I had this past consolidation, this orange or this reddish and this olive green sort of line. And I'm not saying we're going to get all the way back down there, but that is an area of support to keep an eye on if we continue to weaken. First, before that could even be a possibility, we would need to get below 4113, which is the low from August 9th. And why that's important is something I dive into in the foundational studies in all of my courses, or I should say the foundational lessons, as well as my winning price action playbook and missing trend strategy. Okay, I talk about the different types of price highs and lows. There's a bar low, there's what I call price higher low with capital P, swing higher low. So this is an important price low. So if we continue to weaken beneath that level, then over weeks, could even be months, we might make a choppy ride back to where this consolidation had come into play and now still has these old trend lines there, all right? The way I use trend lines is not completely how they teach you for the CMT. I kind of take them and make them a little bit more practical for instant use in the markets. And it's using GAN concepts that I kind of apply a twist. So something I'm excited to teach you guys maybe one day soon is kind of GAN trend lines, like my application of GAN techniques to trend lines. All right, now here is a little bit more detail to keep us going here. When is the next Fed meeting, right? What are all these fears that there are about when interest rates might be changed next? Well, here I have a chart that simply maps out the recent Fed meetings and the rate hikes that happened. Okay, so you can see here that the last meeting we had was in July on the 27th, and there was a 75 basis point hike. And I'm looking over at my physical wall calendar here that I always keep in front of me. And the next meeting is on September 21st. So that's this blue line out here. So you can see there's a lot of time between now and then in terms of room for things to happen, for data to come out that would affect whether the Fed does in fact hike rates again, and even beyond that, how much they hike rates, or if they start to ease off, okay? So I just need you guys to understand that just because there are things going on in the market now that are attuned to certain conversations about rate hikes or the amount of the rate hike, you gotta know the dates of the meeting. And again, in my tribe portal where I have this video shared, I'll share with you one of my favorite calendars. All right, so now I want to come back to my chart that has a little bit more analysis and really lay out what I think is likely to be taking place, okay? I don't have a crystal ball, so I'm going to detail and follow up on this in the Skinny on the Mini reports, but here's kind of like my game plan right now this week. Ready? Okay. I'm expecting that there will be further downside, and there's a decent chance we break below 4113. Now, just because we break that level doesn't mean we're going to drop like a knife back to this consolidation area, this 3,800. There could be a little bit of bumps and waves along the way because notice we are also returning back to the bull support power zone on the daily chart of ES. And I want to show you what I think could happen. I don't have a crystal ball, okay? But here's sort of where my mindset is. So if we come down, test this level, and if the RSI power zones comes in and holds the bull support power zone, then we could see a recovery. And that recovery, it might be slower like this, it might be fast, it might be even slower than what I have sketched out. But my point is this, guys. I actually think that this broad market really wants to get back up into this area, into this 4,400 to even 4,500 area, before a big picture fall for multiple months occurs, anything like we had back here in May, March, June, like this whole period, right? Now, I don't have a crystal ball, so I don't know if it's going to happen, but I wouldn't be surprised. So again, if we get a bit more weakness, we get a recovery, and then that recovery comes back and tests this high, tests and pierces this 62.5%, and if that happens with a bull bear face-off occurring, a bearish one. If that happens, and if this happens into, I don't know, September or so, I would be concerned about the health of the broad market, and I would really advise starting to protect any long positions you have and being more aggressive with your shorts, okay? Again, this is my broad game plan. Do not go and trade by this. If you want to know exactly how I'm navigating this, that's where you can join me in the Skinny in the Markets. So guys, I'm highlighting all these various services and education I have so that you know where you can dig into if you want to learn more about something I'm presenting here. But this is an extremely important, essentially mini class here today about where the market has gone since my last forecast. It did exactly what I thought it would. It did continue higher into October, or I should say August 3rd, and then pushed higher from there. Where it is now, how it's coming off of this congestion, but I see a possibility, no crystal ball, I see a possibility of retesting the recent highs with a bull bear face-off coming into place, which would then be a little bit more concerning for the downside to resume. All right. So for the details and the day-to-day on it, come and join me in the Skinny in the Markets. I'm looking at this on intraday charts, so I'm getting really specific about levels, and that'll be the best way that you can navigate any nuances or changes, because we all can agree these markets are a changing. When somebody speaks, when somebody presents, when data comes out, it looks like it's whipsawing, it looks like it's all over the place. But if you kind of know your broad plan and then you come in and you trade little pieces, you still can find opportunities to capture profit in this environment. All right? Fantastic. Well, remember to subscribe, like, comment down below, follow, join my tribe if you haven't already, and I'll catch you on the inside. You can sign up with the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.